Jets Best Buy on the rise this morning, despite missing sales estimates and forecasting weaker consumer spending to come this year on electronics. Anthony Chukumba, Loop Capital Markets Managing Director, joins us now for analysis. So, Anthony, let's get right into Best Buy first. And we do also want to talk Dollar Tree, but let's start with Best Buy today. What's your initial take of the results?
My initial take was that these are certainly less bad than feared. I mean, comparable store sales did decline 10%, so that's not great, but operating margins were a little bit better than we expected. Our earnings were a little bit better than we expected, and management reiterated their guidance for the full year. In addition to that, they did say that comp store sales trends improved sequentially so far in the second quarter, and they did say that they expect this year to be sort of a bottom in terms of consumer electronics demand. So there were certainly some positive things that we heard as well.
Hey, Anthony, it's Julie here. I also saw inventories, I think, were down about 16%, so an improvement there like we've seen from a lot of the other retailers. Does that mean also that Best Buy is not necessarily having to slash prices as much and offer as many discounts as it did before to try and clear the stuff it wasn't selling out of there?
You're 100% right. I mean, they've kept their inventory levels very, very lean. They didn't necessarily have the inventory problems that we saw from a lot of retailers in 2022, and so that's certainly a positive. I mean, the last thing you want to have when demand is softening is too much inventory, because inventory is not like wine; it does not get better with age.
Anthony, so you all do a price comparison of Best Buy compared to Amazon. Does Best Buy, are they nailing pricing now, or do they need to work on that more?
They are 100% nailing pricing, and they've been doing that for quite some time. So what we have found for the last several years, quite frankly, is that they're pretty much at price parity with Amazon. I mean, occasionally you'll find some small differences here and there, but nothing material. In addition to that, Best Buy will price match Amazon and a number of their other large competitors, by the way, at the point of sale. No questions asked. I've actually done it several times. So, they are not allowing Amazon or anyone, for that matter, to undercut them on price.
Anthony, let's switch on over to Dollar Tree here, because this is an interesting one, right? There was this assumption going in that they would benefit from a trade down effect. It seems like maybe they did, but people are buying a lot of food items which are lower margin for them. Is there anything they can be doing to sort of managing around the situation here that you think that they're not?
Yeah, that's a good question. I mean, look, in terms of the mix, as you mentioned, to consumables, which are lower margin, there's not a whole heck of a lot they can do about that. Now, the one other thing that really impacted them that was a real surprise was shrink. I mean, look, a lot of retailers have been talking about shrink and how shrink has increased. They hadn't been as vocal about that, and that is something that they can and I think will do more to control going forward. But in terms of that mix shift, not a whole heck of a lot they can do. And quite frankly, look, I was very encouraged by the comparable store sales increases in both Dollar Tree, which, remember, was anniversarying that price increase from $1 to $1.25. So the fact they could comp positively on top of that is very encouraging. And then Family Dollar, which has been the redhead stepchild, the problem child, we saw comp up almost 7%. So clearly the investments that they're making are working in Family Dollar.
So, well, in Family Dollar, fine. But going back to Dollar Tree, again, the stock taking a big hit today. Numbers were worse than expected. And they, again, yes, they talked about shrink, but what went wrong here? I mean, you would think that Dollar Tree would hold up strong in the face of an inflationary environment. What stood out to you as to what went wrong?
Yeah, well, let's just clarify. Family Dollar is owned by Dollar Tree, so it's the same company. Right. But I mean, look, I think that there was clearly an expectation that with Mantle Ridge having taken control of the board last year, with Rick Dreiling, who executed the amazing multi-year turnaround at Dollar General, that we would be further ahead in the turnaround, right? That we would see much better, not only top-line results, but profitability results. And we haven't seen that. Now, we have seen the top line improve, and that is very, very encouraging. But profitability continues to be pressured. And I think that there are probably some investors that are losing faith, that are wondering if, Rick's best days are behind them. And quite frankly, I think that's a legitimate, concern, given the numbers that we've seen. Now, my response to that is that, look, I mean, turnarounds, they can be lumpy. It's just not always kind of, straight into, upward and to the right. And I think that that we need to give Rick and the team more time, quite frankly.
Anthony, you have a pretty big coverage universe, and it's a lot of different diverse retailers, from staples like a Dollar Tree to more discretionary like a Best Buy, also Williams-Sonoma, Dick's on the list. Two questions for you on that general front. Firstly, on the issue of shrink, how big of a problem is this for the broader retail industry right now, and how are they getting their hands around it?
Yeah, great question. So it's interesting. We actually hosted a call with a longtime shrink expert earlier this year, and it's a problem. There's no question about that. And it's impacting a lot of retailers. We're seeing a lot of retailers talking about increased shrink. Now, there are some things that retailers can do about shrink. So, for example, you can see them put more items, behind fixturing, where essentially you have to call someone over to open up the item. That's not great from a customer experience perspective. That can certainly work. You might see them add security guards into the stores. Dollar Tree was talking about in Family Dollar, they might even selectively raise prices in areas with high shrink. But to some extent, it's very limited in terms of what you can do. I mean, a lot of it is going to have to come down to local governments enforcing sort of shoplifting laws and cracking down on shoplifters and organized retail crime. And we're just not seeing that.
Yeah, definitely not. Obviously, it seems like it's still just this big problem for them. And then just more generally, too, about consumer spending right now. I mean, as I know not everybody in your coverage has reported as of yet, but from what we've seen thus far, what is distinguishing those that are doing well and those that are doing not as doing as well in this sort of more choosy customer environment?
So, I mean, certainly what we're seeing is that retailers that sell more kind of consumable items, right? Think food, health and beauty care items, cleaning supplies, essentially necessities, are generally doing better than retailers are selling discretionary items, particularly high-ticket discretionary items. And a lot of that has to do with these macroeconomic headwinds. I mean, it's still very, very uncertain. And in addition to that, remember, we had, 2 years of pandemic, driven demand pull forwards in a lot of those high-ticket discretionary items. But having said that, it still is, it's very kind of company-specific, right? So you had, Foot Locker and their, horrific blow-up last week. But then you had Dick's Sporting Goods, who I cover, and they had a perfectly fine first quarter. So, the retail industry, I say it's pretty much always a stock picker's market. You just have to kind of roll up your sleeves and do the work, because while the rising tide does lift and lower all boats, a lot of it has to do with, company-specific, situations and strategies and management teams.
All right. We will have to leave it there, Anthony Chukumba, although I do want to hear your forecast, because I know you made one in 2022 about Bed Bath & Beyond that came to pass, but we'll have to wait for the forecast of what nail in the coffin is coming. Our thanks to you, as usual, Anthony Chukumba, Loop Capital Markets Managing Director.